Hello, everyone, and welcome back to the weekly MMA Cycles Market Update. This is your host, Gianni DePoce. It's good to be back with you on this Friday afternoon. It's been a very eventful week in markets once again. Seems to be a recurring theme in 2023 thus far. We had a couple inflation reports that came in above expectations. This past week, we had some CPI numbers and PPI numbers. PPI is the producer price index, which is often seen as a leading indicator for inflationary pressures. Both of those came in above expectations, which is something that we've been discussing in recent videos and in recent reports, especially with the signatures we had last week, Venus conjunct Neptune on the 15th, and then we had Sun conjunct Saturn the following day on the 16th. So perhaps a stark realization, a reality check, if you will, in the Saturnian sense, that inflation, a Neptunian theme, is running higher than expected. And I think that's one of the big risks in 2023 compared to a recession, at least for the next couple months. So let's go ahead and look at some charts here, starting off with the Dow Jones. Selling off here on Friday, pretty flat. But one of the biggest shifts that we saw in the last week, which is not to be unexpected at this point due to the higher than expected inflation numbers, was the Dow starting to outperform the NASDAQ once again. So Saturn being in its final days of its transit through Aquarius, only 2 to 3 weeks left until it goes into Pisces on March 7th. We'll see if that can relieve some of the stress that is exhibited or inhibited rather the tech sector. You can see that NASDAQ is down 1% and gapping down here and still trading relatively near the lows of the day. So I think with Jupiter still going through Aries at the moment, that's steel, that's mining, that's drilling, that's weapons and defense, all industrial oriented themes, not to mention once Jupiter goes into Taurus on May 17th, that seems to be an inflationary aspect, especially when you consider Saturn being in Pisces. Could that lead to additional shortages in the energy sector? So in such a scenario, wouldn't be surprised if some of the weakness in the NASDAQ continue. But, the fact that we took out the highs in the NASDAQ from Q4 last year is a good sign. Now we just want to see support hold on this decline. I want to take a look at the 10-year interest rate here on the Treasury. Made a new high here. We took out that high from December. Actually, I did not take out that high from December 30th. So basically a double top possibility here in the 10-year yield. But overall, we are near the highs of the week. And that's not surprising given the inflation reports and Venus and Neptune. Many astrologers actually considered Neptune to be a higher octave of Venus. So, when they come together, that can lead to inflation or even a sense of panic or fear that, maybe inflation is coming back, maybe it's not. We'll have to see. But it is worth knowing that these inflation data points are laggard in nature, meaning, the leading indicators are markets, energy, commodities, and whatnot. And then the CPI reports come in a month later once the move's already been made. So just keep perspective on that. We saw big moves in the US dollar, rallied to a new multi-week high, but reversing its gains here on Friday. We talked about this with Ulrich Aspergen last week in a very excellent discussion on currencies. The euro and the dollar index touched on the British pound a little bit as well. So, we're in a very interesting time here for currencies, which are basically the foundation of the monetary system in which we trade and analyze. So important to keep an eye on the US dollar here. But like I said, selling off a little bit here on Friday, not reflective. I'll pull up the ETF, the UUP ETF. You can see that, it did make a new high, but now it's selling off a little bit. The euro catching a little bit of a bid here into the weekend. Want to take a look at gold miners. Gold miners fell to a new multi-week low here as well. As gold has not been doing well in a higher interest rate environment. So we saw yield spike again and hence the sell-off. But, next week we have the start of Pisces season on the 18th of February. And then we have Venus ingressing into the sign of Aries on the 20th. So Venus, again, we have to look at currencies. And we are in a critical reversal zone right now. So we have to keep in mind that the possibility for reversals here is elevated. So look for reversals, at least in the first half of next week, at least according to our methodology. That would not be a surprise to see. So let's take a look at crude oil real quick. Week here on Friday, the high that formed on the 13th on Monday was within 3 days of Venus conjunct Neptune. So that looks to be the reversal associated with that signature, but we still are in that time band and we're off the lows of the day here so far. So if we complete a higher low, could see, a reversal, a more meaningful reversal. But I think that, it still is a sloppy mixed trend market at the moment. Big moves in the cryptocurrency sector. Bitcoin rallied to a new multi-month high on Thursday, rallied to its highest level since June 2022, which is bullish in of itself. Multi-month highs, as a rule, are bullish. So we know that Venus has a significant impact on the cryptocurrency market. And so that is something we need to keep in mind as we have Venus ingressing into Aries next week. It's good that we saw Ethereum also make a new multi-month high, but Ethereum's high only went as high as September. So, could be some intermarket bearish divergence there. I want to give it a little more time, but we are seeing a nice bid here in the Friday session, which is a good sign for the bullish case. So that pretty much takes care of the markets that I wanted to review with you today. Thank you so much, as always, for tuning in. Want to remind everyone that we just published the monthly cycles report this past week on Monday and Tuesday. So that is our flagship service. Would encourage you to check it out. This Sunday, Ray will be hosting his first forecast webinar. And that's going to be at 1 p.m. Eastern time. So we encourage you to check that out. You can find it at www.mmacycles.com. Next week, we will also be publishing the MMA monthly ETF report. That's going to be published on the 22nd of February. So if you like to trade ETFs instead of futures, SPY, TLT Treasuries, GDX gold miners, USO oil, healthcare, tech, home builders, and Bitcoin in there too. I think I got all late, but if not, you can check out all the details at www.mmacycles.com. Thank you all for watching. And again, last note, MMTA enrollment is still open, but spots are filling up quickly. So send me a note if you have any questions or want to discuss that further. Thank you so much for watching. We'll see you same time, same place next week. Bye-bye.